A market doesn't exist if it doesn't have investors, it doesn't have clients. And so we must send a very clear signal to our clients, to those who we serve.
Described as another pivotal step in repositioning Nigeria's capital market as inclusive and a catalyst for investment and economic growth, the formal transition of the settlement cycle for trading from T+3 to T+2, marking a significant shift to 2 days to complete every trade in the market. To launch the T+2 settlement cycle, the Central Securities Clearing Systems PLC led the capital market ecosystem to brief the media on the implications and benefits of the transition.
The transition to T+2 is not merely an operational achievement, it is a strategic signal. It's a signal that affirms that Nigeria is committed to building a market that is anchored on efficiency, on transparency, and on global competitiveness. In a world where investors demand speed, reliability, and predictability, this achievement reflects our readiness to meet and exceed those expectations. It is a declaration that the Nigerian capital market is prepared to compete and to thrive in an increasingly interconnected global landscape. This achievement is the result of months of disciplined preparation, extensive stakeholder engagements to ensure clarity of purpose, rigorous operational testing across institutions, methodical process adjustments, capacity building initiatives, and wide-ranging awareness campaigns. Together, these efforts have enabled the coordination, the confidence, and precision that a successful market-wide transition demands. The adoption of T+2 lays the groundwork for new opportunities that are firmly aligned with Mr. President's agenda for a $1 trillion economy. For this to happen, it requires deepening foreign investor participation in our markets. It requires accelerating post-trade efficiency to enabling the introduction of more sophisticated products and improving overall risk management. It strengthens the integrity of our market infrastructure, and it aligns Nigerian jurisdictions that have long adopted faster settlement cycles. Globally, markets are pushing towards T+1, and they're exploring more advanced systems across different asset classes. And this transition that we're witnessing today positions Nigeria to participate effectively in the next generation of capital market innovation.
Our market relied heavily on manual processes and physical share certificates. My good friend, the Commissioner of Operations, used to be in this building when I was called clerk. It used to take us 3 to 6 months to get certificates ready for trading. And this particular process before used to create significant delays as well as operational bottlenecks contributed to widespread issues, including things like unclear share certificates, dividend, and then declaring investor, if you like, confidence. We are far away from that. I believe that the CSCS was formed in 1992, I think. Yeah. It's actually to help remove that bottleneck. I remember back in the day when we were on the floor. Our settlement day is Friday, and everybody brings his own check, right? Mr. Odon is looking at me. That time you were still, we used to exchange checks. And if I owe you money, if I didn't have cash flow, I will show up on Friday, which means you've taken a risk and you're carrying a debit that I've not given you. CSS originally came and actually cleared that, if you like, risk that is enveloped in the market. We actually moved and upgraded our technology. Nobody knew what happened. I don't know how many people are able to do a major upgrade of their technology and you didn't feel anything within the market. It was seamless. Now, what's the benefit for the market? It's improved liquidity, which means faster settlement frees up capital sooner for investors to be able to, or fund managers or intermediaries to do more with their funds and investors as well. It reduces counterparty risk from a shorter settlement cycle, means there's a lower exposure for you to keep somebody's money and not be able to pay, especially as you move into faster cash settlements across the globe. It brings in investor confidence. Both local and foreign investors benefit from a more predictable settlement process because now you can plan. Even though in the beginning, myself and the custodians were having some kind of argument around, is this the best for us? But right now, there are champions and pushing this in. T-Match, thank you for all of your effort as chairman or president of your association. The CSS readiness was very important and the investments that we made Okay? Without that, we probably won't have the confidence to say, let's go to T+2 or T+1. And some of the things that the major groups we did, I mentioned about Power 10 series, our SOC center, which monitors almost everybody within the ecosystem that we have that we've used. So every time we connect to you, you're also on our SOC. So we start seeing what other traffic that goes through you, that use our APIs, so that we protect the whole market as a whole. We've worked with settlement banks, custodians as well, for this cycle to be able to happen. Of course, for us, safeguarding market integrity remains our top priority, because when our rating agency comes, what's the Thomas Murray, one of the things they look at is when you transited, what happened? What measures did you put? What are the failures that happen? Because they report these things on daily basis when they're failures, and that affects our rating in the rating agency system of post-trade. But more importantly is that we conducted market-wide readiness assessments, simulations, and extensive change management sessions with all the stakeholders, which is why I asked you to recognize the committee that actually sat down, steering committee that actually did this thing on a hands-on basis. Our post-trade processes, I'm happy to say, are now 95% automated, which means it's enabling high-speed, low-latency processing and significantly reducing error rates. So in terms of go forward, right? What are we doing to ensure that market participants are supported? We've established support channels to assist participants through the transition, including system testing environments, process documentation, and dedicated readiness teams. So we'll have a command and control center that if anything goes wrong, so that we have them attending to everybody as we go along till Wednesday, because the real story will start on Tuesday. Because that's the day we'll settle 2 settlements on one day, and then be able to adjust where necessary, which in my mind, I've been told that there's no need for any adjustment, so hopefully it will go well. We remain committed to ensuring a seamless transition with minimal distortions to the market. That's a commitment we had in the beginning before we started this. So what's the impact for retail investors? The shift to T+2 means quicker access to funds and a more efficient trading experience. Because now I like to see them coming instead of 3 days, you start seeing orders recycled to 2 days rather than 3 days, because some people trade, settle, and then trade. Of course, our USDC service, which is *7270# continues to support market inclusion by giving the middle of investors access to their portfolios. But looking ahead, and myself, Mr. Jamale, and Mr. Popola were talking about T+0, that when is next? When is T+1? Well, let's get T+2. T+1 is likely to be in May of next year. While we celebrate T+2, our ambition does not stop here. Of course, work has already started for the T+1, but we need to take a lot of data and see what happens before we move to the real time of T+0. With advancements in our infrastructure, collaboration with central bank, improvements in payment landscape, Nigeria is well positioned to keep pace with an accelerated settlement system, which I believe in strongly. So, today's transition marks the beginning of a new era for our market. We as CSS remain committed to driving innovation, enhancing market trust, and positioning Nigeria as a globally competitive investment environment. We thank all stakeholders for their continued partnership as well as support as we work together to build a stronger, more resilient, and more dynamic ecosystem. Thank you.
The apex regulator of the capital markets, Securities and Exchange Commission, provided context to the innovative move of the market and its expectations.
I thank the professionals who were part of this team, the thought leaders, but most importantly, I thank the critics, of whom I was one, and the skeptics. I was one. And I'll tell you why. I was a skeptic and a critic because of responsibility. We cannot afford to fail. We cannot afford to get this wrong. We're taking a very bold step. We're announcing to the world that we're moving forward. Not only, God forbid, our energy and our talent will forbid that we lose, that we don't make this work. We will make it work. And how do we make it work? It's not by chance. It's not just by a wish. It's not just a joke. It's not. It wasn't by happenstance. It was very deliberate and very intentional the way we have gone about this. At the SEC, we recognize some certain things. What we're doing now is going to bring us some challenges. It's going to challenge us to have sharper surveillance over transactions. It's going to ask us to make sure we have the capacity to detect faster errors in the system. It would challenge us to make sure that we have very quick dispute resolution processes in place. We must open up communication channels and make them more efficient. And we must always and consistently test and stress the system to see and make sure that it's working, because things are now bringing quicker results. It means that the impact is going to be faster and more pronounced. So it's going to challenge us, we know that, and we're prepared for it. A market doesn't exist if it doesn't have investors, if it doesn't have clients. And so we must send a very clear signal to our clients, to those who we serve. We serve them as a regulator, we serve them as exchanges, we serve them as infrastructures, we serve them as operators. We must send them a clear signal of what they stand to gain. Lower counterparty risk, as we mentioned, greater liquidity, greater reliability, faster access to proceeds. Jalo Son can come in, for example. We're aligning with global settlement standards. And to the general public, it just sends a message that Nigeria is committed to developing a credible ecosystem. So this is really great news.
Mr. Bola Ajumali, Executive Commissioner Operations, Securities and Exchange Commission, speaks on how the T+2 new settlement cycle will boost investor confidence.
Over time, markets have moved towards more efficient settlements, not only in capital markets, but also in banking settlements. Remember, there was a time when we used to settle banking ordinary fiduciary instruments over a 21-day period. Now we're in the almost instant settlement situation. The same thing's happening in capital markets, where transactions that would normally take about 6 months are now being settled 3 days after the transaction. What we're doing now is we're shortening that cycle by another 24 hours, and we're moving to a T+2. With a T+2, you then get more efficiency, you then get faster transactions, you then, of course, will bring more liquidity into the system, and ultimately will lead to a bigger market, and also one where if you buy a security today, or if you sell a security today, you get your money much earlier. Of course, this is a step in the right direction, but essentially it's the beginning, it's not the end. The end goal really is to hit even T+1 or possibly even T+0, where you have atomic settlement, and settlements take place immediately that the transaction happens. So we're just moving in the right direction, and we're speeding up the efficiency, improving the efficiency of the capital markets.
Nigeria's capital market ecosystem has indeed evolved with leadership, technology, innovative products, and enabling regulations to position it for global competitiveness and inclusivity. With the T+2 new settlement cycle, the expectation is that it will strengthen investor confidence, deepen liquidity, reduce market-related risks, and signal to the world that Nigeria is ready for the next phase of capital market advancement.